When I first started trading stocks in my 20s, I started out with a broker that I later found out was expensive in fees. You're listening to Investing Mastermind Podcast. My name is Signe and
And I'm Michelle Markey.
And today we're going to talk about how you can choose the right broker for you. So as mentioned, when I started investing or trading stocks as I was doing at that time, I really didn't know what I was doing. I just picked a broker that I'd heard about. And when I learned more about investing, it turned out that this broker was expensive in fees, as well as had some other limitations that I needed in order to actually follow my strategy. And that's actually my first point with you guys, is to know your investing strategy, because some brokers are great with short-term trading. So they have inactivity fees, which means that if you are inactive for 12 months and don't trade 5 times in 12 months or something like that, you actually have to pay a fee. But for us as Warren Buffett style investors, we likely won't trade 5 times in a year unless we, do options trading or more advanced trades like that. But as Buffett style investors, we are buying only a few stocks in our lifetime and we're keeping them forever, which means that we don't want that inactivity fee. So that is my first learning for you guys, is to definitely understand what is your strategy and does that broker support your investing strategy. How about you, Michelle? Do you have any learnings from, some of the brokers that you've known and tried over the years?
For sure. And I have a lot to say about fees. And it's interesting that one of the brokers you're mentioning had charged fees for inactivity. I've never seen that, as far as I can tell, in American brokerage accounts. I'm not aware of that.
TradeStation is one of them. Mm-hmm.
They do that. I didn't know they did that, because maybe others do that too, but I'm not familiar with that, since a lot of the brokerage accounts I've used never had any fees of that sort. And I've used brokers like Fidelity, and there used to be Scottrade before Scottrade got bought out by TD Ameritrade, which just got bought out last year by Charles Schwab. And a lot of these are kind of not using that much in fees nowadays, ever since a rule changed in October 2019, which just opened the floodgates, where you used to have a commission that you had to pay for buying stocks or selling stocks. Like, I remember when I first opened my first brokerage account at the age of 18, Scottrade was what was recommended to me by my older cousin, who they'd been using it. So I went with that one because that's what I understood. And at the time, it was like $7 per trade. So it's interesting that, back then, you had to actually think about, how many stocks do I want to buy at a time? Because if you just buy one stock, you're going to pay $7, whether you buy 1 or 100 shares. So the interesting thing is, that was one of the reasons, is that among the brokers at the time, Scottrade had some of the lesser fees, but then eventually they all started reducing their fees. Like, eventually Fidelity went to $5 a trade, and the same with TD Ameritrade before, like I said, it became 0 commissions to invest and trade in stocks. But the interesting thing is, if you had instead invested in some index funds or mutual funds, some of them may not have had a load fee, which was kind of basically the commission fee, and some of them did have load fees. So that also used to be something that you'd look for, and now they've renamed it to transaction fees. So if you look at some of the mutual funds being offered, a lot of times they don't have commissions to get into it, but sometimes you have minimums. Like, I think one of Vanguard's index funds, you have to put a minimum of $3,000 invested to even join that fund. Or a lot of them used to have like $10,000 as a minimum or more, or $2,500 as a minimum. But a lot of that has come down now, so that investing is more accessible to everyday people. So it's very interesting how a lot has changed over the last 10, 15 years in terms of investing and trading. And before we move forward, I also just want to make a slight distinction between trading and investing, because some people could have a little bit of a, not fully awareness of the difference between these things. And so, when you're trading, you're mostly doing a trade like buying a stock and selling it in a short amount of time. So generally, if you're trading, you expect to be in and out of shares frequently, and you're not really planning to hold any given stock for probably more than 6 months to a year. So that falls more within the realm of trading. Whereas if you're investing, like Signe was mentioning earlier, as a Buffett style investor, we generally try to hold shares for more than a year and holding it for as long as we can. So thinking in the long term, ideally 10 years or more, if you're really following in the true footsteps of Buffett style in his principles of investing. So I just want to add that, because people could have a little bit different ideas. Like they think they're investing, but really they're trading, and vice versa.
That's true. It's important to highlight. And, that is something that you need to be aware of before you choose your broker, because, for example, what you were saying about that there's no commission fees or trading fees in the US. In Europe, we still have trading fees, and you need to be aware of if you're trading stocks in your own country, sometimes that's cheaper than buying shares overseas in the US. I've seen that from many European brokerages. And, when I talk to clients from different parts of Europe, for example, that's something to be aware of in terms of TradeStation. It was actually because, I was talking to a US client and I needed to just get updated. I do also have some funds in the US, so I am aware of a lot of brokers over there. But at TradeStation, for example, I was saying that there's an activity fee. What is important to say is that if you have $2,000 in the account over the past 12 months, I think it is, then they don't take that fee either. So of course, it's you just need to keep those $2,000 in your trading account, and you don't have to pay that fee. So it's not 100% an inactivity fee. They do void that when you have 2,000 in the account. But the reason why we talk so much about these fees is that it's going to get expensive for you if you only have a few $1,000s to trade with, or euros for that matter. If the fees are going to eat up some of that, you just want to make sure that you don't pay too much. And that's where, you can look on the website. One thing I've noticed is that there are certain European brokers that don't take any trading fee or commission, but you can be certain that they do take a fee. And what the problem is there is that it becomes less transparent what they're doing. Sometimes they front load, as it's called. So they will buy the stock in the milliseconds before you buy it and then bump the market price up a little bit. Other brokers talk about that they want to be able to lend your stock out to short sellers, and that's how they cover the expenses or actually earn money from you. And there could potentially be other business models that I'm not aware of, but I want to say that you can be certain that you do pay somehow. Somehow you do pay, and I actually like it better when it's transparent than if you have to, read all their terms and conditions in order to actually find out how am I paying them.
Yeah, for sure. And yeah, that's definitely something to be careful of. After that rule came into place where the zero commissions with a bunch of brokers came out, like I think one of them started doing it, like they lowered their commissions to zero, and then everybody else followed suit in 2019. And then during the pandemic, everybody started kind of trading and investing like it was gambling. Like throughout the pandemic years, everybody was at home, and with zero commissions, you could just go to town. But some, what it's kind of referred to as, is making money on the spread. So whenever you were to trade or invest in a stock, there's an ask and a bid, and one of those is the sell price, one of those is the buy price. So let's say you're selling a stock, you might get a lower amount for that stock than someone who's buying it, who has to pay more. So let's say a stock might be on sale in the middle for $30, but the seller might only get $29.99 and the buyer might have to pay $30.01. So that spread in between, that 2 cents, is where the broker can make money. And for some, like Fidelity, it's pretty good. Like they don't really make too much money off of that spread on you from what I've read before. Whereas others like Robinhood, they depend on some of that way more. So them having that access to that information and selling it to third parties is part of their business model. So let's say the spread could be even wider. So as a seller, maybe you're only getting $29.90 for the stock. And as a buyer, you have to pay $30.10. So potentially Robinhood could be making 20 cents. And don't quote me on this. This is just hypothetically speaking. But compared to Fidelity, that's only making 2 cents on that spread, maybe Robinhood's making 20 cents on that spread. So it's kind of interesting that you just have to look into to see how is your broker still making money on what you as an investor are trying to do in your brokerage.
And if you want to read more about something like this, Michael Lewis has written a great book called Flash Boys, and it's he says it's a tale of high-speed trading. And that's where, if you want to understand more about how does this technically actually happen, that book I highly recommend that book. It's very well written and it's easy to understand. So go check that book out if you would like to know more. So, besides fees, something that is very, very important to me is their customer service. And what I do is before I sign up with a broker, I actually like to call their customer service. I prefer to call them, but you could also email or use the chat bot. And, I really recommend that with whatever business that you're dealing with. And the times I haven't done it and then afterwards had to reach out to them and found out their customer service wasn't good, it's not been a fun learning experience. And when it comes to trading and investing, you want to make sure that it's somebody who can explain things to you. So, just call them and ask a few questions. It could even be questions that you already know the answer for, or that you're just curious about. For example, what we just talked about. Since there's no trading fee or commission, how then do they earn their money? And maybe, they want to tell you, and maybe that's a question they don't want to answer, or maybe they don't know how to answer it at their customer service. But you want to make sure that you can reach them, that they're reachable, and that you get good answers and a kind person to talk to that really wants to help, and not some of those that is in the world to not really help out.
I've had good experiences when I've called into the customer service of Fidelity and TD Ameritrade. Charles Schwab is okay too. You want to be able to have a good experience. And I know from another person's experience with Vanguard, they were calling about some generic question, and then they got a little bit upsell into participating into more of a managed account deal, which if that's what you're looking to do, that's okay. But just be aware that if you're not sure what you're doing, but then you get upselled into kind of, paying someone on their side to kind of manage your accounts for you, just be aware of what you're really signing up to and make sure you understand the materials, because there's some people like me, I'm more of a do-it-yourself investor. So I want to have full control over all the stocks and funds that I might be invested in, whereas other people might need more of that helping hand. So just be kind of aware of what your objectives are when you're calling into customer service. And if you feel like they're trying to sell to you, you should be really conscientious about, do you think that would be truly in your best interest, or are they just trying to make some easy money off of you? Because I'm not saying that Vanguard is just trying to make easy money off of people, but maybe they earnestly believe that their product of a managed account is better than just say, if you do it yourself. But I think in this day and age, if you're willing to put the time and effort into investigating existing funds and the expense ratios, which I try to advocate going for as low of an expense ratio as you can. Like, for example, I might be tooting the horn a little bit more Fidelity because I'm more experienced with their product, whereas I've never been a customer of Vanguard. And from what I can tell, Fidelity offers similar funds at lower expense ratios compared to what Vanguard has for the same thing, like an S&P 500 index fund. So Fidelity's will be like a 0.015% expense ratio, whereas Vanguard's might be around 0.03%. So it's basically, if you invested like, I think, $10,000, for Fidelity, you're going to pay $1.50, but with Vanguard, you're going to pay $3. So that might not be a big deal to some people, but it's just a little distinction to be aware of. And, that's all I kind of also wanted to add, as to, be aware of what kind of service you're receiving from some of these brokers.
And that actually leads me into something that also should be mentioned, maybe a little bit back to strategy that I was talking about earlier, but there's different brokers out there, but not all brokers have the products you may need, like index funds or ETFs, mutual funds, bonds. You definitely want to make sure that your broker have, the different kinds of assets that you, or securities that you want to trade, instead of, having brokers here, there, and everywhere where you have to keep track. I'm not saying there's anything wrong with having several brokers or brokerage accounts. You can definitely have that. And for me, I use 2 different brokers. At one broker, I have a dollar account where I trade in dollars and potentially could set up in other currencies in order to not have to pay an exchange fee every time I want to trade American stocks here in Denmark, for example. Another thing I want to talk about is reliability, because what we have seen in the past is that some of these brokers that people had a lot of faith in actually all of a sudden stopped existing. And it's very, very difficult to actually know that as a private person. But if there's, usually there's rumors around, and other times, what we see, like, for example, with Robinhood and the whole GameStop debacle back in the early 2021s, Robinhood actually almost had to close down, and they had to make a deal. I don't remember the details of that, but luckily for everyone who was on that platform and had their money with Robinhood, that broker continued to exist. But there's other examples back in 2008 of, strong institutions that you really believed in. Like I said, it can be very, very difficult to know, but one thing you need to be absolutely certain of is that it's regulated by the governments or governmental institutions. Like, for example, in the United States, it's the Securities and Exchange Commission. And a while ago, I came about a trading platform that's not regulated by the SEC. And if you're playing with that, you're playing with fire. And once the SEC finds out that exists, they're going to come in and close it down, most likely, unless they report to some other country. So make sure that the broker that you use, to just check that they are regulated by a governmental institution, or if it's not in your country, that is definitely in a country that you trust.
And speaking of some of that, I mean, governance is super important, like making sure you can store your money somewhere that you can trust and believe that's not going to fail and not going to have your money held hostage. Because actually, even though, Robinhood had some of those struggles, some people actually have trouble getting their money out of Robinhood. Like, I've seen some YouTubers talk about how difficult it is to get their money out of Robinhood or some of these other more mobile-based brokers. So you want to be careful and look up other people's experiences and reviews of how easy or difficult is it to get your money out of one broker and move it into another. Because I've had some 401ks at some brokerages that were really easy to transfer. And let's say I wanted to convert a 401k into an IRA. It was super easy. They had all the straight up paperwork and it was no big deal. Whereas, like, potentially if you're just using a normal brokerage account, sometimes some brokers give you a hard time about moving your money and stocks out of the one into another. So that's definitely something you want to pay attention to, is kind of like, how easy is that going to be?
Yeah, you also, before you even create the account, take a look at the fees it's going to cost you to actually close the account. Because again, recently I was doing some research on American companies for a client, and oh my goodness, some fees that they have in order to actually give your money back. It is quite steep. Some of them 125, I believe one of the American brokers were charging for you to close your account and move money out of your account. That's quite shocking.
And what you could do to avoid some of that sometimes, like for example, let's say you're moving money from one account to another, like at a different brokerage. Sometimes you have to leave some money in the original broker, like with Fidelity. Let's say it was around $200 that I remember one time. So I just left that money there and kept the account open instead of closing it where I might have had to pay a fee, like maybe $80 at the time.
But isn't it just crazy that you have to do that and just leave $200 in that account? I know that Danish brokers, they aren't any better. They also charge a fee, but it is kind of funny how they charge a fee for you to actually get your money back. I know that you've been using their service, you've been paying them for it too, but yeah, it's definitely some of the things where it can get quite expensive. One thing that matters to me, and I know it's going to matter to a lot of especially beginners out there, is the user friendliness of the platform. A lot of American stockbrokers like Thinkorswim from TD Ameritrade or Charles Schwab soon, TradeStation, Interactive Brokers, they have these paper trading accounts, which means it's like a platform where you can play with paper money, with monopoly money, try to buy and sell stocks. And I think that's a great way to getting to know the platform. You don't have to pay for it. You just sign up with your email oftentimes and can get started right away. And some of the brokers here in Europe have the same. And as a beginner, it's a way for you to actually try out the platform, see if it works for you, maybe collect some questions that you can ask their customer service, and just try the usability out. What I've seen from many brokers is that the language that they use, it's so difficult for beginners. It's from bid and ask, like you were talking about earlier, Michelle, and language like that, it can be very difficult for beginners to understand. And I know that in recent years, some brokers has made it easier for people like us to understand the difficult lingo that they use, but there's still quite some way in that area.
Definitely watch tutorials that I'm sure exist online for most brokerages, and Thinkorswim has a bunch. Like they even once sent me like a giant manual in the mail, which is kind of funny that, like thinking about using a manual, but
that is funny.
If you should really get to understand all the functionalities of what your brokerage is offering before you invest or trade, because that's where you can make a mistake and you could freak out. Like sadly, that was part of something that actually happened during the Robinhood GameStop frenzy stuff, like in 2021. There was someone who was doing some options trading and they didn't know what they were doing, and they got freaked out and they thought they had lost hundreds of thousands of dollars. And sadly, they did something very sad about it. So I'm not going to talk about too much, but it's just, you really need to know what all the functionalities are. And before you make any kind of like complex trade or even just normal buying and selling, like at a market or a limit price, you should get to know what all of this stuff means before you do it. I know that's definitely a big beginner question. And I have some videos that I've actually explained some of this, like what are all the different kinds of market orders that you can do? And, what are some of the cheapest index funds that you could potentially invest in if you're interested in that. But yeah, definitely get to know all the functions as much as you can before you invest. And also read the prospectus of any funds that you're interested in. There's lots of those resources on the brokerage sites. Like they explain a lot of that. So yeah, it's a good point that you're bringing up of the user interface and getting to know all of it.
We'll make sure to also link to Michelle's profile from the show notes. So make sure to check out the show notes if you would like to learn more about this lingo or about mutual funds and what to look for. We're coming to the end of the show today. Thank you so much for listening. We will be back on Tuesday.
Till next time.
If you enjoyed the show and found the content informational, we would be super grateful if you would leave us a review and follow us wherever you get your podcasts so you automatically get new episodes in your feed. We publish a new show every Tuesday.
The contents of the Investing Mastermind podcast are for educational, informational, and entertainment purposes only. None of this is investing advice. And if you need help in your personal situation, please consult with a professional.